Taiwan, Hang Seng both seeing cuts of over 1.5%.
After 2 years, this is the first full festive period that people will have without the fear of COVID, and that's obviously driving people into the shops.
The 20-day exponential moving average of 17,475. That's been well respected, and in fact, there's a good chance that today you get very close to that.
There have been steady, if not spectacular, flows into dedicated India funds.
The Nifty is down about 130 points, 123.
This year, the sales have been even through, and quarter one saw a very, very healthy growth across April, May, June.
Among the two stocks, ACC and Ambuja, the valuation is much comfortable in case of ACC.
Intend to go we formed this platform called TI Clean Mobility.
Markets have started slipping a tad bit as we speak, so we're down about 100 points on the Nifty.
For now, additional stake sale is completely off cards.
All eyes are going to be on Apple today, the world's biggest company and the most influential.
It is Disneyland for a bunch of people we now call sneakerheads, guys who are addicted to buying sneakers and selling them as well.
Nifty, which closed lower, massively lower, is down just 10 points as we speak.
Good afternoon and welcome to Closing Bell. I am Anuj. With me is Nigel, and like we discussed in the morning, the market is absolutely fine. In fact, the SGX Nifty was down 200 points. The market opened lower but respected the SGX Nifty low, respected the 20-day exponential moving average. In fact, the low today is just 10 points higher than that 17,475 number that we spoke about, and just reiterates the kind of market we are in, especially the broader market. The advance decline comfortably in the favor of advances. You could argue that today perhaps the bank Nifty is not done as much as better as you would have expected it, but that's okay, I guess. Given the way things started, the bulls would have been happy if the Nifty was down 20 points at 230. They would have taken it with both hands. Nigel, hi, good afternoon.
Well, that's right, Anuj. If your risk reward was favoring really buying at the dip, and if you got that 200 points, which we actually got at least at one point of time, that clearly played out well. And the mid-cap index, that's where the money is being made, up close to around 0.5% yet again. So don't fret too much about the Nifty. Take a look at the broader markets. Plenty of stocks out there which are seeing buying interest, and the advanced decline ratio, that's testimony to the fact that this markets, particularly the broader markets, is still very much buy on dips, and there's plenty of value in select stocks out there. More number of stocks advancing than decline. First up, let's run you through what we have on the show, and then we'll see how the next 60 minutes plays out. The top story of the hour: the cabinet shows a thumbs up to the reduction of rail land license fee to 1.5%. That's what CNBC TV 18 learns from sources. The stock did spike in Britain trade. However, there's a clarification coming in which has brought the stock off the day's high. We'll get to that in just a bit. Dr. Reddy's, that's in focus as the street awaits the launch of cancer drug Revlimid. What's in store for the company post-launch? Well, we'll get to the details on that. Bajaj Autos of the top losers on the Nifty today on the back of a CLSA downgrade. We'll get the rationale behind the call later on the show. And the cement pack clocking in big gains. Shree as well as Ultratech among the top gainers on the Nifty. An all-round check on the sector lined up on the show. And we'll also talk all things market the way forward with Vaibhav Sanghi of Avendus Capital.
Well, but before that, as always, we start the show with last hour calls. As we speak, the Nifty is comfortably off the lows, down just about 30 points. The bank Nifty, though, is still down about 0.5% or so. Mitesh, hi, good afternoon. What have you made of this classical sort of buy on dips that's played out today, especially on the Nifty? And what would be your last hour calls now?
Yeah. Good afternoon. So I think my understanding is that while the Nifty in the last 2.5 weeks is consolidating, I think you're seeing a lot of sectoral churn. And today I think cement is clearly, the stock which is given breakouts along with some mid-cap names. And my sense is that even on the hourly and the 2 hourly charts, the Nifty IT looks like might reverse very soon from the oversold level. So I think it's clearly nothing but a market which is trying to find feet at higher level, consolidating, but a lot of sectors are still showing signs of continuation on the upside. We've had buy calls on Ramco Cement earlier and Ultratech Cement as well. Now I have 2 buy calls. SBI Life is a stock which is just on the verge of breaking into fresh highs. The pivot is at about levels of 1335 or so. We have had a high of 1337. So let's keep it 1340 as the trigger for taking a fresh trade. Buy about 1340 with a stop below 1320 for target of 1390 to begin with. And Sun Pharma is also reversing after a good sideways consolidation in the last few weeks. So Sun Pharma is a buy. Keep a stop below levels of 884 and a target of around 920 is what I would look for.
Okay, all right, Mitesh, thanks a lot for that. Well, a lot of stocks are moving around. It's a good time to get in our market expert, Prakash Diwan. Hi, Prakash, good afternoon. Good to have you on the show, Prakash. You know, the broader markets, there are plenty of stocks that are moving around out there. And I want to focus on Dixon Technologies. You know, the stock was at 6,300. Then it halved, you know, nearly halved from its peak. It's moved to the high point of the day. It's up close to around 3.5% odd at around 4,300. How would you view the stock?
Good morning. Good afternoon, Nigel. So, you know, I think interestingly, all these stocks that were very expensive from a PE expansion perspective that we'd seen probably, you know, went through a very significant and a desirable phase of consolidation. But what's changed in that same period, while the stock had halved, as you mentioned, is that Dixon also got into a lot of the smaller component manufacturing, not just the end product or the final assembled product. And that is something where, you know, you end up actually having a slightly superior margin profile, given the fact that these are mission critical components or components that you can't kind of, you know, very easily replace vendors for. And that's where, you know, some sort of pricing power comes back. It's a soft power. It's not something very distinctly strong as compared to other things. But you know, when you have PLI benefits being accrued to you, the end customer definitely tends to kind of negotiate harder. But this is that pocket which is kind of helping it grow or scale up in a way where the margins could probably come back, if not towards erstwhile levels, but decent enough. So if people are willing to wait that long, in the sense, give it time for at least the next 18 to 24 months, that's where the, you know, margin profile would improve. So from that perspective, with the risk reward has become much more favorable. PEs come down. EPS potential has gone up. So yes, it's definitely in a phase where it's constructive. And a lot of the newer geographies that they will start addressing is also the upside or the trigger that's optionality that's attached to it. So quite constructive on it now. But, you know, the market is giving you enough choices, Nigel, especially in that space, in that mid-cap space. As you can see, the way mid-caps are flying today. So you could pick and choose. But yes, on Dixon, definitely it's much more constructive than it used to be earlier.
Okay, just keep an eye on the market, because just in the last 5 minutes, the last bar is actually quite big red bar that you're seeing on the screen, and a few stocks would come up for you. Tata Motors is moving to low point of the day. Adani Ports is moving a bit lower from the highs. Then there's SBI, which is dragging a bit. You know, keep an eye on some of these names. Let's now focus on the big story on Concor. Sapna is filling us in with some important updates, some clarifications on what exactly has happened today. Sapna?
Yeah, hi. So importantly, what government sources are pointing out is that the new land license fee policy is not automatically being changed from 6% to 1.5% odd. So, you know, we have got feedback, you know, that the stock has really climbed, Concor stock has really climbed today. So in that context, I think these clarifications will be important. Plus, of course, very shortly there's going to be a cabinet briefing, so details will come out in that. But till then, it's important to know that this change is not going to happen automatically. Existing players will continue to pay 6% unless they decide to come into the bidding process for the new base rate of 1.5%. So basically, there's going to be a transparent and competitive bidding for this base rate of 1.5% to apply, and the existing players, you know, they can participate in that. If they do, I mean, they will have the first right of refusal. So it's not going to be an automatic switch, so to speak. It should not be construed as the 6 now becomes 1.5 for everybody across the board. That's not right. Last but not the least, the existing entities using railway land for cargo terminals, hence the explanation that the existing entities using railway land for cargo terminals will have the option to switch to new policy regime after transparent and competitive bidding, as I just explained. This is an important thrust. Today's announcement is an important thrust, part of the PM Gati Shakti program. So it's very important for the railway sector as a whole. It should be looked at in totality and not just Concor per se, just because this investment has been announced and, you know, at some point in time that will also follow through. So that linkage is not that straightforward and simple. 300 PM Gati Shakti cargo terminals will be developed over the next 5 years, and about 1.2 lakh employment would be generated.
Got it, Sapna. Thanks a lot for that important clarification. The stock, of course, is off the highs. Prakash, how are you reading this news flow then? Because there was initially a lot of excitement, but obviously this clarification has taken a lot of sheen away. What's your call on the stock now?
Good afternoon, Anuj. So, you know, I think interestingly, it kind of flags off two things. One is that the government has finally arrived at an outcome or a decision on something which is pending since quite some time. It's almost like, what, a year and a half that this was in the waiting. The second thing is that this also paves the way for the eventual divestment for the business as a whole, right? This was one of those issues, the contentious issues, which had to get sorted out. Now, if you ask me, Concor as an asset is definitely valuable, even if it has lost some 3-4% from where it was just, let's say, 45 minutes back when the news was announced. But importantly, this also paves the way for other players like Gateway Distriparks and all, which are much smaller, of course. I mean, there's no comparison, but people who are utilizing the same kind of a value chain, participating in the same value chain to benefit from this lower LLF. So that's going to be positive, because the government realizes that unless this sector kind of, starts getting profitably to scale up, nobody's going to get interested in this. So I think it's very positive. More from a medium to long-term perspective, not just immediately, because people expected too much that 6 is going to come down to 1.5, and everybody started penciling in some benefits. But I think the larger benefit is that eventually the divestment will happen, and this issue is out, which could benefit some of the other players as well.
Okay, all right, got that. Thanks, Prakash, for that. By the way, from the broader markets, we spotted Dixon earlier. Astral, pull up the intraday chart out there. The stock was doing more or less, just a % gain or thereabouts. But, in the last 20 minutes or so, there's been a big volume spurt up out there. And the stock as well as spiked up. Maybe if we get a bar up, that'll give us a better picture out there, because the stock has suddenly seen a sharp spike up close to around 4.5% as we speak. So keep an eye out on that one. Plenty of stocks from the broader markets moving around. So let's move on. Let's shift focus to one of the top losers of the day then. Bajaj Auto, that's underperforming today. It's under pressure owing to a CLSA downgrade. Sonia's with us to run us through all of those details. Sonia?
Well, thanks a lot for that. If you remember, when the numbers came out for the two-wheeler sector, we had highlighted that the big takeaway is a fall in exports. CLSA today downgraded Bajaj Auto to an outperform. They lowered their target price by 8% to 4343 rupees. They do mention the same reason, that there is a big fall that we've seen in exports, and most African markets are very challenging at the moment because of a dollar shortage there. Remember, 60% of Bajaj Auto's volumes, export volumes, comes from the African market. Nigeria has also seen a restriction on two-wheeler movement, and because of this, CLSA forecasts a 16% decline in the motorcycle exports for FY23. But Bajaj is not alone. All its peers have also seen a big slide in exports. TVS exports were down about 15%, while Hero MotoCorp, which has a smaller portion, exports were down almost 50% year-on-year. Back to you.
Okay, all right. Thanks for that, Sonia. Prakash, what's your take on the stock? Two-wheeler space and Bajaj Auto in particular, the stock is underperforming today.
Nigel, I do agree. It is a disappointment, and especially when you really don't know how soon this issue on the markets that Bajaj exports to would get resolved. But then, there are so many other triggers attached to this business that you really don't think that this is such a debilitating factor in terms of its growth itself. So I do agree. In fact, when the results were out, Sonia and I discussed, it was around 4,000 plus. It lost some ground, recovered again. So this will keep on happening. But what it tells you is that probably there could be some money that will start going back to Hero MotoCorp, because that's a domestic facing theme, and very strongly there is some sort of a revival of demand coming with the coming festive season and a decent monsoon. So, those triggers could probably play a little bit of a shift in terms of allocation. But otherwise, I think from a medium to long-term perspective, I wouldn't find faults with Bajaj Auto at this point in time, just because of this particular aspect.
Okay, that's on Bajaj Auto. Well, just looking at a few more names in the broader market, there's clearly a lot of action happening. Federal Bank, I think that's been seeing a bit of a decline of late ever since that clarification. 2% off on that stock now. So there it is. Before we take a break, just a word on Federal, Prakash, because even before this buzz surfaced, the stock was doing well. So how would you approach it?
I think it's a good opportunity for people who probably just bought it in anticipation of some sort of a M&A transaction happening, and then got disappointed that it was clarified it was not going through. The bank on a standalone basis has enough merits, Anuj, and we've spoken about this so many times, that the kind of expansion that it's looking at, the kind of segments it caters to, everything is kind of converging into a very strong growth narrative. I don't see any reason why you can't still buy it at 120, 115 odd, wherever it is, from a medium to long term perspective, given that banking as a whole is growing, and this could probably outperform the sector from the mid-sized private sector pocket. I don't think the M&A is something which is required for this bank to prosper or to grow. So there you have, on a standalone basis, also there's enough merit to buy it.
Okay, all right. Prakash, stay with us for the time being. We'll slip into a short break. You come back, we'll discuss the cement pack. It's buzzing in trade. We'll get you an all-round sector check on that one. And post that, we'll also talk all things market. Vaibhav Sanghi of Avendus Capital will be joining in. Well, in the last few days, the smaller cement companies have been buzzing. But today, some of those large cap, those frontline names, they have come back, and they have come back in style. Well, if you look at it, for this year itself, ACC and Ambuja, they have been relative outperformers. That's after a while, because in the last 10 years or so, you have seen UltraTech as well as Shree Cement make way more money. They have been the real compounders out there. So ACC Ambuja, why is the street bullish out there? They believe the new promoters are going to come in. They're going to be far more aggressive, go for market share, go for volumes as well. So there are hopes pegged on the new promoter. That's the Adanis. For Shree Cement, remember, there was a lot of selling. As the street was anticipating that it'll get knocked out of the Nifty. That announcement has come in there. So now, in fact, that news is out of the way. That's why you're seeing a bit of a bounce up, and a bit of a catch up is what you're seeing out there. Now, valuation-wise, Ambuja Cements, well, it trades at a bit of a premium in comparison to ACC. But keep in mind, most of the expansion will happen at Ambuja Cements. That's because they have higher amount of limestone. So that could be one factor. And profitability-wise as well, Ambuja Cements, well, its EBITDA per ton is higher than ACC. On UltraTech as well as Shree Cement, well, in comparison to what they traded, in the last 5 years or so, they're at a bit of a discount out there. But there are 5 big reasons why the cement pack on the whole is buzzing around and why there is optimism. First up, cement prices, I understand, in the month of September have increased by 15 to around 30 rupees per bag. The Birla Corp management, they joined us earlier today. They indicated demand is strong and this will get absorbed. However, on South India, I have my doubts out there. Point number 2 is pet coke prices here in India. They're down by close to around 25% approximately. Internationally, it's down by close to around 35%. So in all probability, from Q3 onwards, coal as well as fuel prices, they'll come down drastically, which could result in 200 to 300 rupees per ton savings. Margins could bottom out in Q2. Whatever's being said, Q2 is going to be an awful quarter because it's a seasonally weak quarter as well. But post that, volumes will pick up, pricing will pick up, and input costs will cool down. Post monsoon, you also see demand that spikes up. So second half of the year, the street is bracing for a rather good recovery. And finally, hopes of consolidation in the sector, which currently the street is saying that the big will get bigger. So maybe, in fact, the pricing will remain stable. That's the logic out here. So 5 big points why, in fact, the space is buzzing around. Prakash Diwan still with us. Prakash, what's your pick from this space now? Dalmia Bharat, I didn't mention. That's one of the stocks you've been quite fond of in the past. Will you still go for that one, or do you believe it's time to go for the big boy, maybe in UltraTech Cement?
No, so Dalmia Bharat for its own fair share of organic promise that it has, but Ambuja is something which probably is going to be the spark in this entire large cap pack for the simple reason, as you very rightly said, with the new promoters coming in, some of the efficiencies could kind of dramatically change, and that's what, and their cost as compared to ACC is much higher, right? It's $160 per ton as compared to $122 for ACC, which means there's room for improvement in that as well. And if the prices come down, if the input costs come down, you'll probably see a very remarkable change in profile for the scale that Ambuja has and the potential expansion that it is going to be taking it. So I think there's no doubt on that on the large cap side. But, this consolidation that you mentioned, Nigel, that's very promising for the simple reason that it's probably limestone access, it's transportation and logistics efficiencies, it's some of the distribution networks that some of them have, some brand value. That's all going to play into consolidation for the smaller names. So that's where I think the next round of picking should be, cherry picking should be, and there are companies small enough to be acquired, not big enough to compete, but still have some value to offer to the acquirer. So that's going to be interesting. We'll probably cover it in a separate dedicated show one of these days, and that's going to be very interesting.
Okay. By the way, just let's highlight Infosys also a bit because Prakash, this 1 year is ending from the last buyback tomorrow. They're free to go for another buyback. At some point they will, like they've normally done over the last 2 or 3 years, but it's not necessary, of course, that they come out right now itself. There could be a bit of a gap, like was the case previous time as well. But do you think that this could provide some kind of floor to the stock, even if you see a decline in Nasdaq, etc., that there's always going to be perhaps this hope of a buyback?
Oh, absolutely, Anuj. I think the screen is telling you that it's much more cushioned on the downside as compared to TCS and Wipro and all, which at times tend to kind of absolutely be in free fall mode. But the other thing, the advantage that I see in IT is that it's kind of getting a bit deceptive. The Nasdaq tells you that there is pressure on IT stocks, but those IT businesses are far more different than what an Infosys or a TCS cater to, right? I mean, they still have new wins that are coming their way. There could be a lot of cost saving that they will eventually start seeing with some sort of a moderation in wage costs and all. So I think IT will definitely bounce back, and Infosys probably will lead that charge, given that it's not lost too much ground and it's easier for it to come. But some technical trigger like the buyback would only aid that. Even on a business perspective, I think it's much more strongly placed than some of the other names. Tech Mahindra is, of course, my favorite for other reasons, but from the top three, I think Infosys definitely makes the grade.
Okay, thanks a lot, Prakash. Have a good evening. We'll talk to you again soon. Vaibhav Sanghavi is now joining us. He's co-CEO of Avendus Capital Alternate Strategies. Vaibhav, hi, good afternoon. Thanks a lot for joining us. How are you approaching this market? There's clearly some global risk off, but our market just does not care.
You bet, actually, Anuj. I think the momentum on the local side of the domestic market has been phenomenal. And having said that, in spite of the weakness of what we are seeing from a US perspective, we have been trading in the band of about 17,500 to 20,000 kind of, or 18,000 kind of Nifty. So what we would think in this kind of scenario is basically, and given our past experience of how and when the Fed does any action or kind of is on the path of guiding the market towards, it's very difficult to fight the policy stance of Fed on an overall basis. So what we would think is basically once kind of the euphoria kind of is over, things may get a little choppy, on the downside, should the global markets continue to correct. So that at this point in time, obviously, I mean, we are cautious and risk factors are pretty much in place at this point in time.
Okay. Hi, Vaibhav. The question we normally ask you, how are you shifting around things between your long-short positioning?
Now, of course, I think, Nigel, in terms of the volatility which is persisting, in those kind of scenarios, one, that we don't go aggressive in terms of positioning ourselves in either direction. We wait for the direction to kind of seep in and then probably take a good, directional call. At this point in time, while my gross exposures are lower, my net exposures are also lower than my longer term averages as well. So at this point in time, it's just wait and watch. Either, it crosses 18,000 on the higher side and we see that the momentum kind of further catches up, or probably, witness some amount of correction coming from the global side. So let's wait, I would say. But my intuition or my, experience tells me that Fed is generally right and we cannot fight Fed is what I would suggest.
So, Vaibhav, what kind of stocks are you buying now? What broad themes are you backing?
So the broader theme is currently domestic versus global. So anything which is globally exposed are the sectors which we are kind of avoiding. In the light that when the global GDP forecasts are going to get thrown, and all the central bankers are going to focus on demand, suppression. In that kind of scenario, we don't want to be focused, or we don't want to be exposed to any sectors which are globally exposed or probably has a larger share of exports as a revenue. So from a domestic side, I think we'll continue to have our overweight positions, especially on the banking side and probably consumers as well. Industrials, we like it, but at this point in time, they have run up too fast, and probably will wait for some correction to kind of see if we can enter again in that kind of space. So those are the sectors which we are looking from a portfolio perspective.
All right. From the banking names, Vaibhav, give us some more clarity out there. Would you look at the frontline banking names? NBFCs, I think, is something that in the past you haven't liked. You continue to avoid them?
We continue to avoid them, and in the past as well. And we have been always bullish on the private banks. We continue with that view. And the only caveat here is basically that should the FI selling kind of resume again, then probably we may see some amount of pressure on banking, probably because banking financial is a larger part of the portfolio. But from a fundamental perspective, I think all the banks have cleaned up the balance sheets, are witnessing some good amount of credit growth. So the health of the sector is pretty good. In that light, I think we want to be, going with, pretty much on the private sector banks for the longer term investment. But on a trade perspective, we may also look at PSU Bank, but that is probably renting rather than owning.
Okay, Vaibhav, the space which has seen a massive rally is automobile, right? Again, that domestic theme comes into play. But from being under-owned, are these stocks now getting into a bit of an over-owned category, or at least, in the near term?
No, I think, I think there has been a considerable underperformance, barring these kind of 3 to 6 months of autos for the last 4 to 5 years. Now, we have to understand that when the tailwinds of raw materials kind of are getting in, plus your pent-up demand is pretty much there, generally it's very difficult for the analyst to kind of give a very big bump up in terms of the margin numbers and subsequently the profitability. So as and when the subsequent quarter, these companies kind of keep on declaring the numbers, we will see some amount of surprise on the earnings front, which may probably get their annual numbers revised, and subsequent the movement of the share prices as well. So my sense is basically we're not done yet. We are still bullish, but our focus would be currently from a PV perspective, again, domestic focus, or probably CVs as well. So those are our pocket of kind of preferences.
All right, Vaibhav, in this conversation itself, you mentioned quite a few times that you're cautious on global themes. And metals and mining, that's something that you haven't liked. In the last few conversations as well, you said, no, you're not yet comfortable out there. But on IT, they're facing various headwinds. At what point of time would you turn this cautious stance on IT? What if it corrects 10-15% from here on? Would it then come to a level that, you'd like to give it a second look, or do you believe there is far more pain given the kind of re-rating we've seen now that PE multiple itself needs to contract?
Absolutely, Nigel. I think from a pre-COVID period to now, all the across the sector, we have seen some sizable PE re-rating on the higher side. Of course, there has been considerable or commensurate buoyancy in terms of the business and the revenue trajectory. And there is also some pressure on the margins as well. What we would think is basically, given that the headwinds are coming about from the global perspective, and we may see in a couple of quarters' time, company to start guiding on softness on the revenue side as well, is when we may see that there can be one bout of negative surprise in terms of stock price movement on this sector. When we talk about 15% down from here onwards, then probably these companies in which ways have a longer term good prospect. These are cash generating companies. So at some point in time, I think these could start to look attractive, which is 15% down. Of course, we will have a look at it. Yeah.
Okay, Zee Entertainment is surging, by the way, now 4.5% higher. Vaibhav, it's a very small sector, but do you have any view on media? I mean, you've seen recent moves. Of course, some of them are news-driven, like NDTV, but Zee, Sun TV, a lot of these stocks have been making a decent move.
No, we generally don't actively track this sector, but the viewer preference, if we may say so, I think is to a great extent moving on the OTT side. And given that, given the original content which is coming about, of course, on a medium to longer term trajectory, the business are looking good. So whichever management is able to kind of capture that kind of viewer share on a consistent basis is something they will probably, be the leader in this segment.
Okay. All right. Vaibhav, thanks so much for stopping by, giving us your view on a whole host of sectors as well as the index. The momentum is with the Nifty, but maybe at this point of time, closer to around 18,000 odd, Vaibhav was saying some bit of caution is warranted. So limit to a short break, come back. We'll focus on what's going on in D Street. Stay with us.
Welcome back. Well, the market is still, where it was when we started closing bells. So no incremental moves. The Nifty is down about 35 points and the Bank Nifty is down 237. Mitesh is back with us for BTSD calls. Mitesh, go ahead.
Yeah. Anuj, buy on Aditya Birla Fashions. That's given a big breakout, trading at now all-time highs. There's a BTSD can be taken with the stop at 317 for targets of 330. And even a position call can be taken with the stop at 310 for targets of 350 here. And a BTSD on Zee, which in the last 45-50 minutes, 1 hour has picked up very nicely on the upside. So BTSD with a stop at about 256 for targets of 267.
Okay. All right. Got that. Thanks a lot for that, Mitesh. From the broader markets, a few stocks are really flying away. Tarson's products, stock is up 12%. Massive move out there. The stock was actually up 7-8%, I recall, but now it's spiking up. And on this Concord issue, where the street is still hoping that the divestment is going to go through. The LLF, remember, it was proposed to be reduced, but it's coming with a couple of conditions. So the stock corrected from the day's high, was up 15% at one point of time. The gains are halved, but there still appears to be some bit of a hope out there. And Wockhardt, one of the big wealth destroyers actually for the last many years. Stock is at around 250 rupees odd, but it's seeing a bit of a bounce. For the time being, let's shift focus to D Street Chatter. Nimesh is with us to give us an insight into dealing rooms. Nimesh, take it away.
Hi, Nigel. Again, sharp recovery from intraday, and that's what there is so much of momentum for the bulls. Again, the broader indices outperform for second day running, and for change, I understand in terms of flows, there is a basket buying in the mid-cap stocks with a leading FI yesterday. That explains a big outperformance in the mid-cap and small-cap stocks. The sector rotation continues, so cement stands out today in terms of big momentum and good amount of interest as well. And on the other side, some bit of profit booking in the auto names today. Again, from a technical point of view, it's still in that range between 17,200 and 17,800. But there is still selective buying in the financial names. So the Nifty Bank has also recovered from the intraday lows. The overall feedback is, while we are in a consolidation, there is a lot of momentum in the broader markets, and today for a change, it's backed by FI buying as well. There is a basket buying in the mid-cap stocks today.
Okay, and what about individual stocks, Nimesh?
So in terms of individual names, the first stock is Adani Ports. That stock is buzzing in trade on good volumes, and I believe now at these levels, one of the active global fund has started buying into Adani Ports. So that's the reason why a bit of momentum in that stock. The second stock is Ambuja Cements. For the last 2 days, there has been a lot of blocks changing hands. And the overall feedback is, while some of the global funds seems to be selling out, on the other hand, most of the domestic funds are active buyers. So that's a big change of hands in Ambuja Cement from FIS to DIS in the last few days. So that's the second one. The third stock is Torrent Power. The entire power space is buzzing off late, and Torrent Power today stands out purely on back of strong buy flows at a leading FIS. So that's the third one. And the last stock is Dixon Technologies. There is a sharp surge in the last half an hour of trade in Dixon Technologies, and one of the reasons is there is going to be market at close buying flow at a leading FIS, and hence a bit of up move in that stock as well today.
Nimesh, thanks a lot for that. For now, let's now cut across to the cabinet briefing by Union Minister Anurag Thakur and Dharmendra Pradhan.
दिक्कत आती थी, जल शक्ति मिशन का काम चल रहा है तो पाइप डालनी है तो उसके लिए अनुमति लेने में समय लगता था। इससे जो आम आदमी के जीवन में बदलाव आएगा, यानी कि उसकी जो सुविधाएं मिलती हैं, चाहे वो जैसे मैंने पहले कहा बिजली, गैस, पानी और सीवरेज निपटारण से लेकर राइट ऑफ वे, चाहे ऑप्टिकल फाइबर का हो, उस सब के लिए इससे बल मिलेगा। और प्रतिवर्ष बाजार मूल्य का जो 1.5% ही इसमें मात्र देना होगा। इसके अलावा इसको पीपीपी मोड पर अच्छे स्कूल के भवन बनाने हो तो उसको भी देने का प्रावधान इसमें से किया गया है। स्वास्थ्य की सुविधाएं करनी हो तो उसके लिए भी प्रावधान होंगे और इसके लिए मात्र ₹1 प्रति स्क्वायर मीटर के हिसाब से नॉमिनल वार्षिक फी ली जाएगी। आपको ज्ञात होगा इससे पहले मात्र 5 वर्ष के लिए ही भूमि देने की जो अवधि होती थी मात्र 5 वर्ष की ही होती थी। अब इसको बढ़ाकर जब 35 वर्ष किया गया है तो उससे ज्यादा कार्गो टर्मिनल्स बन पाएंगे, ज्यादा निवेशक आ पाएंगे, रुचि उनकी बढ़ेगी और जो जनता से जुड़ी हुई सुविधाएं हैं उनको भी मिलने में देरी ना लगे, क्योंकि रेलवे की लाइन पूरे देश भर में बहुत जगह है, उसका लाभ भी हो सके, वो भी हमने इसमें किया है। कुल मिलाकर 300 गतिशक्ति कार्गो टर्मिनल्स विकसित होंगे और 1.25 लाख से ज्यादा रोजगार इसमें होंगे। दूसरा निर्णय जो माननीय प्रधानमंत्री मोदी जी के नेतृत्व में लिया गया वो आदरणीय धर्मेंद्र प्रधान जी के विभाग शिक्षा मंत्रालय से है। आपको ज्ञात है जैसे कि शिक्षा के ऊपर पहले दिन से ही प्रधानमंत्री मोदी जी का बल रहा है, इनकी सरकार का बल रहा। अटल जी के समय सर्व शिक्षा अभियान से देश भर के स्कूलों का कायाकल्प हुआ, शिक्षा में विस्तार जो सुविधाओं का था वो भी हुआ और समग्र शिक्षा अभियान माननीय प्रधानमंत्री मोदी जी के नेतृत्व में इसकी शुरुआत भी हुई और न केवल शुरुआत हुई बल्कि 2,94,283 करोड़ रुपए का बजट का प्रावधान भी उसके लिए किया गया। देश भर के लोगों के लिए केंद्र सरकार की ओर से लगभग 2,94,000 करोड़ रुपए का प्रावधान समग्र शिक्षा के माध्यम से भी किया गया।
Okay, so that was Anurag Thakur talking about that LLF policy review. But for now, let's move on then. Ekta is joining us to give us an insight on the launch of generic version of blockbuster cancer drug Revlimid and what that may mean for Dr. Reddy's in particular. Ekta?
Thanks for that. Well, yes, September is an important month for the likes of Dr. Reddy's as well as Cipla. These companies are expected to launch the generic version of the blockbuster cancer drug Revlimid, making it the next wave of companies to launch after Teva did in partnership with the Indian pharma company Natco earlier this year. Now, a quick refresher. Revlimid is a cancer drug by Bristol Myers Squibb used for conditions such as blood cancer. The drug generated sales of $12.8 billion in 2021 before in terms of global sales. BMS settled with around 10 companies on the launch of the generic version of the drug. Settlement terms for most included a volume-limited launch till Jan 2026 with no limitations thereafter. The drug lost exclusivity in 2022 when Teva did launch the drug in partnership with Natco, which was in fact the first generic version of the drug in the US in March 2022. So what makes Dr. Reddy's different from other companies that settled with BMS? Dr. Reddy's has 180-day exclusivity on 2 strengths, which is the 2.5 mg and the 20 mg versions of the drug. To put it into perspective, Natco had exclusivity on the 5, 15 and 25 mg strengths, which they launched in March 2022. Dr. Reddy's, which settled with BMS in September 2020 and received final approval from the US drug regulator on the 2.5 and 20 mg strengths in 2021, is expected to be launching all strengths of the drugs as Natco's exclusivity period ends, but will be the only company to sell the generic version of 2.5 and 20 mg versions of the drug in the US till March of 2023. So how lucrative an opportunity is it for Dr. Reddy's and others? Over the next 3 years, the contribution is estimated to be as much as $600 million if things go right for Dr. Reddy's, as it has exclusivity on the two strengths that I mentioned earlier, and up to $300 million for even the likes of Cipla, which has received US FDA approval for the drug and said that they will be shipping the drug shortly. Sun Zydus too could make up to $300 million as per analysts if they launch the drug now or in the next couple of weeks. The contribution for Dr. Reddy's depends on a few factors, such as the contribution from the 2.5 and 20 mg versions of the drug, which are only about 10% of the total market of Revlimid generic. Also, while Natco has exhausted their volume limitations in Q4 and Q1, it could be an opportunity for the likes of Dr. Reddy's to grab their share, but the opportunity might just be limited due to a cap on the amount Dr. Reddy's and the others can sell, and will also lastly be dependent on the number of companies which are slated to launch and the timeline of the launch as well.
Okay, all right, Ekta, thanks a lot for putting that piece together. Mayuresh Joshi of William O'Neill joins us on the show. Well, Mayuresh, good to speak to you after a while. You heard that piece coming in from Ekta. Any view on these clutch of stocks?
Afternoon, Nigel. No, I think Ekta explained it very, very well. Just to add a few pointers to Cipla, because that is what we are liking at our global level as well. I think there are quite a few launches that are going to come Cipla's way over the next 2 quarters. So you're looking at the advanced respiratory complex drugs being launched. Advair probably in the first part of the second half, and Abraxane at the end of the second half as well. You're also probably looking at a few peptide injectable launches that are expected to go through, a couple of them this financial year and a couple in the next as well. So I think these complex launches, as they come through, the margins should sustain between 21 and 22% for Cipla. And the large expectations in terms of going into the private space from the tender space in the South African business, and domestic formulations, the branded domestic formulations accounting for 45% of their overall revenue in acute and pain, with 71 ANDA launches expected to come through. I think that should augur well for Cipla as well. So I think Cipla is something between the two is what our global team is liking, Nigel, at this point.
Okay, all right. Well, let's focus on a couple of these insurance stocks, and Mayuresh will come back to you then. Some news from the insurance sector. Sources tell CNBC TV 18 that IRDAI mandates dematerialization of new insurance policies. Yash joins us to fill us in with more details on that. Yash.
Well, Nigel, very quickly, just yesterday we had told our viewers exclusively that the insurance regulator met the industry, both life and general insurance industry, and on the agenda was the discussion on mandating dematerialization of insurance policies. That has come through. The mandate for insurance companies has come through, and there are certain timeline also to follow those mandates. As far as dematerialization of insurance policies is concerned, all new policies sold after December 2022, which is December of this year, will have to be put on the DMAT platform or will have to be dematerialized and sold. And 1 year exactly after that, that is by December 2023, insurance companies have been asked to convert the existing or the old policies also in the record and bring them on the DMAT platform itself. This is a huge step as far as financialization of insurance itself is concerned. Just to give you a little number, life insurance companies just in FY22 sold 3 crore policies in just 1 year itself. Imagine the number of new DMAT accounts which could be added for people who did not have a DMAT account but had an insurance policy. Now that will be linked and brought on the DMAT platform itself. Now this particular dematerialization will be done through depositories like NSDL, CDSL, Carvi, so on and so forth. And CDSL is one stock which is listed, which will see a good benefit coming out of this one.
Okay. Yash, thanks a lot for that. Mayuresh, good afternoon. Your thoughts on CDSL first? Let's start with that.
So afternoon, Anuj. I think the kind of exponential numbers that we have been hearing 4 crores before COVID in terms of DMAT account holders crossing 10 crores and a large part of them being retail holders, which means almost 3/4 of the new business probably comes and flows into CDSL as well. The new rules that Yash was seeing even for insurance policies, I think that becomes a value add for companies and depositories like CDSL. But the business model itself remains very, very robust with all these new additions coming through. Very, very stable annuity income expected to come through. The recurring income that probably comes through in terms of new listings, what comes through in terms of their regular flow from transaction charges as well. And new additions that you're probably seeing in terms of the sheer flow through the capital markets, all that augurs well for CDSL. So yeah, I think the momentum might very well continue for CDSL.
Okay, all right. Thanks for that, Mayuresh. We'll come back to you. For the time being, we'll slip into a short break. You come back and then the final 10 minutes of market closing. Well, we briefly spotted this Tarson's products a short while back. The stock is up close to 18.5% as we speak. So a big run is what we're seeing out there. Garden Reach Shipbuilders, that stock as well is spiking up. Just take a look at that intraday chart, should come up for you on the screen. And a couple of other names, Vaibhav Global as well. Now that one as well has moved to the high point of the day as we speak. So a few of these stocks, they've really got momentum with them. And that explains why the mid-cap index as well up close to around 0.5% odd. But a good time to get you some market opinion. Earlier today, we caught up with Cameron Brunt, Director of Research at EPFR Global. He says there has been steady inflows into Indian funds, also gives his outlook on the emerging markets. Let's hear him out.
There have been steady, if not spectacular, flows into dedicated India funds. And India funds have been really second in the emerging markets universe after China in terms of attracting fresh money. And so certainly, I continue to think that that's a likely trend. As I'm sure you're aware, many of the forecasts in the developed world, especially Europe, for the end of the year into next, make somewhat gloomy reading. So a large market with a strong domestic demand story and the promise of 7% growth is very attractive at the moment. I don't see much competition at the moment from any of what you might call the second-tier markets. And I think until those waypoints in Brazil and China are passed, that India is likely to see pretty steady interest from the GEM fund managers. Emerging markets are certainly holding up better than I thought they would earlier this year. The big ones, India, China, and Brazil. Russia's out of play at the moment, but even Korea. I'm certainly seeing interest that is more often than not positive week to week.
All right. Well, Mayuresh Joshi is still with us. Mayuresh, you track any of these companies? Tarson's products, the stock is flying away. You have a couple of other names as well. Igarashi Motors, we had briefly spoken about that, I think, a few months or so ago. Any view on any of these names? Both of them, doing rather well.
Very interesting, I think. Tarson's is something that I definitely had a look around. And what you're probably seeing in the plastic labware market, I think, is expected to grow exponentially. So I think what you're probably seeing in terms of end user applications, Nigel, pharmaceutical companies, contract research organizations, as well as diagnostic companies make full usage of this, and it's growing at a very, very steady pace, along with the export market, where there is huge potential for plasticware to grow. Now, the kind of expectation that one has in terms of numbers for Tarson's itself, I think it's pretty good as well, because if you probably look at the overall labware size of the market, it should actually reverse. So I think the glass labware market now, and over the next 4 years, should tilt in favor of the plastic labware market. And that is where I think Tarson's is probably going to have a huge say. EBITDA margins have been pretty solid at 45-46% odd, profit margins at 30% odd, and that is expected to continue. So yes, I think the dynamics changing in favor of plastic labware benefiting Tarson's to a great extent.
Okay, well, there's a few names which have done well in trade today. Let's do one thing. Let's we have got some market opinion. Earlier in the day. We caught up. Okay, Mayuresh, just getting your thoughts on a couple of other names. What's your view on Biocon now?
No, so I think it's a wait and watch on what is probably happening. I think what you're probably liking specifically, as I said, within the pharma space is Cipla. So I think in the pharma universe, very, very selective at this point of time, looking at what is expected to happen in terms of both US launches for the industry as a whole, where Cipla is expected to do well, as I said, and margin performance as well. So apart from that, I think as we spoke last time, I think Capex as a theme is something that we continue to like. A lot of stocks within this team have done well, and what we've recommended to our clients, including the likes of Siemens, ABB, Timken, Tube Investments. So I think this is one theme that can continue doing well. And as an extension, again, I think hotels and leisure as a space, in our opinion, that is where the momentum should continue, because that is where the highest EPS rating and RS rating probably stands out as per the methodology.
Okay, all right. Mayuresh, before we let you go, one final word on Hindalco. You have the converter business in there, which gives them some support. That's a Novelis business. Running at almost optimum levels, promising that they're going to do a EBITDA per ton of $525 on a per ton basis. The India business, though, that's, impacted by LME aluminium. Now, off late, we've been hearing about a lot of shutdowns in Europe, which the street is getting a little excited on. Unfortunately, it's not reflecting in the LME aluminium prices. My guess is that the destruction in China, that's still playing on mind. If China can return back on the demand side, do you believe that Hindalco is well placed at around 430 rupees?
So I think some price strength is needed as per the O'Neill methodology, Nigel, at this point of time for Hindalco. But you're absolutely right. I think some dynamics from China need to change to probably have this entire sentimental aspect in the end usage of both alumina and aluminium to probably be put in place. What I'm reading through in terms of a lot of reports is also the fact that aluminium will be extensively used in terms of electric batteries as well. And the inventory levels that you're probably looking at this point of time are at absolute low level over the last decade as well. So I think demand should remain extremely strong. It should bounce back as in the next few quarters as well. And as the Chinese demand comes back over the next few quarters, I think that reflection will start coming through in the second half as well. So I think the second quarter again expected to be a little bit weak on the margin profile for a lot of ferrous and non-ferrous companies because of the high inventory that they hold. But large expectation is that companies like Hindalco and companies in the aluminium space should probably outperform the non-ferrous space because of the end user applications. And that should probably start coming and trickling through from the end of quarter 3 onwards. So yeah, I think the prospects look good, but some price strength needed for Hindalco.
Okay, Mayuresh, thanks a lot for joining us. Have a good evening. Let's start wrapping up the market action for the day. What today's action has told you is that, and the point I was making in the morning as well, focus on price action. Forget about what SGX Nifty tells you every morning, because the price action in our market has been very strong, and consistently the market's been defending the 20-day exponential moving average. The day it violates that, perhaps that trade is nullified, but till then it remains a buy on dips market. And today, of course, you had as good a day as any for that to play out. The Nifty, in fact, gaining over 150 points from the lowest point of the morning. In fact, the market never revisited those lows, the first hour lows. In terms of individual names, since the market was still down on aggregate level, I'm starting with the losers. Tata Motors, Bajaj Auto, Maruti and M&M. So basically, the auto stocks saw some profit taking. Some of these financials like HDFC, ICICI Bank, HDFC Bank and Kotak as well were down. Reliance was the other stock which put a bit of pressure on the market. Along with that, you had Apollo Hospitals, Tata Steel. These were a few names which were down. On the upside, of course, it was all about cement today. Shree Cement led the charge with 8.5% gain on that one. Ultratech Cement was up about 4.5%. So these two stocks really stood out. Adani Ports was up 3%. Coal India was up 2.5%. Britannia, Grasim, BPCL, Cipla were some of the other gainers, and some IT stocks, TCS, Wipro, and maybe even Infosys managed to do well. But the broader market is the place to be in. It has been for quite some time, and today was also buzzing over there, Nigel.
Indeed, Anuj, that's the place to be. Just take a look at that. On the day, you have the Nifty down 30 points up, 30 points down. Well, you pick your stock right, you would have made plenty of money and plenty of stocks flying around. EIH, the stock was up close to around 10%. Autoline Industries, we don't talk about that stock very often. Well, that was up close to around 10% odd. Sanghi Industries locked in upper circuit. The street is sniffing something, unsure whether or not something's going to happen out there. But the street believes this asset is good and something's got to give out there. So that's why that stock is holding higher. Vocart, plenty of rumor mongering out there. No confirmation. The stock was up close to around 9% in today's trading session. To name a few more names though, Igarashi Motors was up close to around 20% in trade. Garden Reach Shipbuilders as well was up close to around 17% in today's trading session. And you throw in a couple of more names that did pretty well in today's trading session. You had Rani Bricks, that was up close to around 5.5%. So there's some things up. The Nifty was mildly lower, down close to around 20-25 points odd. The Nifty Bank took a harder knock. That was a relative underperformer today, down close to around 200 points odd. The mid-cap index, that was the space that was making you the big money, up close to around 0.5% odd. Well, we'll wind down on this edition of Closing Bell. You don't go anywhere. Our Wednesday special, Mad About Markets, comes up next. You don't want to miss this.